Hello, ladies and gentlemen. I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook: Asian shares. They joined their global peers in the red zone on Wednesday, with, of course, investors turning their attention to domestic data releases, earnings on Wall Street, and the fall in commodity prices. All of that in focus. China's benchmark, Shanghai Composite Index, drifted 0.4% lower by the midday. China Construction Bank, however, made losses of 0.8% in Shanghai and 1.2% in Hong Kong, following news that the Federal Reserve told the bank to do more to fight money laundering on Tuesday. A fall in Apple shares, however, on Wall Street took the wind out of the sails of the Nikkei 225 index, which pulled back from its highest close since June 25. Attained in the previous session, which was down 1%. The dollar eased 0.2% to 123.67 yen, slipping further away from Tuesday's high of 124.40 yet set on Tuesday the greenback's highest level in about 6 weeks. Although the dollar could gain if the market starts to fully price and the possibility of the U.S. Federal Reserve rising interest rates twice by year-end, the greenback may surge to rise to levels above 125 yen in the next month or two. Moving to the land down under, Australia's S&P 200 index looks set to reverse a 6-session winning streak and now is down 1.1%, with banking and resources plays leading the move down. Apart from stumbling commodity prices, second quarter consumer price index, and of course the speech by the Reserve Bank of Australia's governor are also in focus. As we mentioned, consumer price down is down under a rose 0.7% on quarter in the April-June period, just shy of the 0.8% gain expected, but up from 0.2% increase in the January quarter. In his speech, Governor Glenn Stevens said further interest rate cut remain on the table, prompting an imminent fall in the Australian dollar to 0.7377 against the greenback. And earlier in the session, the local currency had inched slightly higher to 0.7436 on the back of the CPI data. In Europe, equities are expected to open lower on Wednesday following weakness in Asia overnight, as U.S. earnings disappointment and, of course, the drop in commodity prices weigh on the sentiment. The euro is slightly higher, 0.1% to 1.0940, having pulled up from a 3-month low of 1.0808 set on Monday. Elsewhere in Europe, UK Finance Minister George Osborne's austerity program went a step further on Tuesday as he challenged some government departments to find spending cuts of up to 40% by the end of the decade. The pound, however, is traded slightly higher versus the US dollar, above the 1.56 level, and of course is set to climb even higher today. Gold in the commodity sector fell on Wednesday for a 7th session in 8, reflecting sustained downward pressure on the metal days after its steepest drop in almost 2 years, with more losses seen ahead as the demand outlook dims. A looming hike in the U.S. interest rates has dented gold's appeal in an investment, encouraging more sellers in the market after Monday's 4% growth. However, holdings in the top gold fund SPDR Gold Trust dropped further, making their lowest since 2008. Gold prices fell 0.7% to 1093.60 an ounce in Asia trade, not far above Monday's through of $1,088.05 when bullion hit its lowest since March 2010 in a sell-off by huge volumes traded on the Shanghai Gold Exchange. Oil prices in the energy sector fell on Wednesday after industry data showed U.S. crude inventories rose last week when they had been expected to drop. Even a weaker dollar helped to limit deeper losses. However, U.S. crude held above the $50 a barrel level on Wednesday after dipping below that mark this week for the first time since early April. In Asia trade, West Texas Intermediate for September delivery was trading 68 cents lower at $50.18 a barrel after closing 42 cents higher in the session before. Prices came under pressure after data from the industry group, the American Petroleum Institute, showed U.S. crude stocks rose 2.3 million barrels in the week ended July 17. However, the U.S. Energy Information Administration report is due later today. And at the end of today's session, we're looking at the most important events in the calendar today. At 8:30, Bank of England's interest rate decision, followed by the inflation report at 9. And at 14, the Energy Information Administration will release its crude oil stock change report. That's all for today. Thank you very much for joining us. See you next time. Bye-bye.